So if your business has had a good year and you're looking at making a healthy profit, there are a few things you can do to make sure you're not paying more tax than what you need to. The first thing we generally suggest to clients that have had a good year is to pay your superannuation early. Superannuation is one of the few expenses that you get the tax deduction in the year that the payment's made, rather than just when it's accrued. So for example, the June 30 super that you've got to pay by the 28th of July, pay that in June. Pay it early and get the tax deduction this financial year. You're going to be parting with the money next month anyway. The next suggestion we make is have a look at whether there's any expenses you can prepay. If you know you've got to travel between offices, is it worth booking a whole bunch of flights for the next 6 months and just incurring the expense now? Is there some insurance or some subscriptions you could even pay in advance to book the expense in this current year and therefore reduce your profit in this current year? The next thing we look at, are there any capital assets that you need for your business? Even though the instant asset write-off has been reduced from $150,000 to $20,000 this year, $20,000 still buys a lot of laptops and things around the office that you might need to improve the efficiency of your team. The final place you should look for some extra deductions this year is actually in your receivables list. Print out a list of all the customers that still haven't paid you this year, and if there's customers sitting in there that are actually never going to pay your bill, take the time before this financial year to actually write them off. The last thing you want to be doing is paying income tax on an invoice that you're actually never going to receive payment for.